Booyah! Welcome to the greatest show on Wall Street, folks. It's the ultimate showdown, a clash of titans for the ages. In one corner, you have the human trader, flesh and blood, gut feelings and instincts, years of experience etched into their very soul. They can smell a winner a mile away. They live and breathe the market. They feel the fear, they feel the greed, and they use it to their advantage. They are the artists, the gunslingers, the legends who built this market from the ground up. This is trading with heart, with passion, with a human touch that no machine can ever truly replicate. It's about reading the room, not just the ticker tape. And in the other corner, you have the challenger. The cold, calculating, lightning-fast automated trading bot. It's pure logic, zero emotion. It's a machine built for one thing and one thing only: making money at the speed of light. These bots don't get tired. They don't have bad days. They don't second-guess themselves. They follow the rules, execute the plan, and never, ever blink. They run on complex algorithms, crunching mountains of data in the time it takes you to sip your coffee. This is the new age of trading, a digital revolution that's changing the game forever. The robots are here, and they are not messing around, people. This isn't just some science fiction movie, my friends. This is happening right now, on every exchange in every market across the globe. It's the classic battle. The seasoned veteran versus the young, supercharged rookie. It's the artist versus the engineer, the gut versus the algorithm. For decades, the trading floor was a human domain, a chaotic dance of shouts and hand signals. But now, the floor is quieter. The action has moved to server farms, to lines of code, to fiber optic cables humming with billions of buy and sell orders. The stakes have never been higher, and the question on everyone's mind is who will win. So who are you betting on? The human with the golden gut, the one who can feel the market's pulse? Or the machine with the silicon brain, the one that can outthink and outpace everyone? This isn't just about making a quick buck. This is about the future of finance itself. It's about whether intuition and experience can still compete in a world dominated by processing power and speed. Grab your seat, folks, because the bell is about to ring, and this fight is going to be one for the history books. Let's get ready to rumble. Let's talk about the old school, the classic, the manual trader. Think of it like this. You're a programmer from the early days of computers. You're not just dragging and dropping things. No, sir. You are writing code line by line, punching cards, understanding the machine from the inside out. That's what a manual trader does. They are hands-on. They are reading the charts. They are watching the news. They are listening to the conference calls. They are piecing together a story, a narrative that the numbers alone can't tell you. It's an art form, not just a science. You have to feel the rhythm of the market. The manual trader is a detective, always looking for clues. They're not just looking at a stock's price, they're investigating the company behind it. What's the management like? Are they winners? Are they losers? What about the competition? Is there a new product coming that could be a game changer? These are the questions that a simple algorithm can't answer. It takes human intuition, that special spark, to connect the dots and see the big picture. This is where legends are made. This is how you find the next big multi-bagger before anyone else even knows its name. You have to do the homework. But here's the rub, the Achilles heel of the human trader emotion: fear and greed. They are the two most powerful forces on Wall Street, and they can wreck even the smartest investor. You see a stock dropping, and fear kicks in. You sell at the bottom, locking in your loss. You see a stock rocketing higher, and greed takes over. You buy at the top, just before it all comes crashing down. It's a classic story, and I've seen it a million times. Keeping your emotions in check is the hardest part of the job. It's a constant battle between your gut and your brain. Look at a master like Warren Buffett. He's the epitome of a successful manual investor. He doesn't use fancy algorithms. He reads annual reports. He studies businesses. He famously said to be fearful when others are greedy, and greedy when others are fearful. That's the mantra, but it's easier said than done. It takes incredible discipline to buy when everyone else is panicking, and to sit on your hands when everyone is chasing a hot stock. Manual trading gives you ultimate flexibility, but it demands iron-willed discipline that few possess. It's a high-wire act without a safety net. Now let's flip the switch and talk about the new kid on the block: automated trading. This is the future, happening today. Think of it as the most advanced self-driving race car you can imagine. You don't need to steer it. You don't need to shift gears. You just program the destination, profit, and let it fly. These systems are built on pure, unadulterated code. Algorithms, my friends, they are sets of rules meticulously crafted and back-tested that tell the computer exactly when to buy and when to sell. There's no hesitation, no second guessing, just flawless, lightning-fast execution. The engine behind this revolution is code. We're talking Python, C++, R, the languages of money in the 21st century. A programmer might write a simple rule like, if stock XYZ crosses its 50-day moving average and trading volume is 50% above normal, then buy 1,000 shares. The machine then scans the market, thousands of times per second, waiting for those exact conditions. The moment they are met, bam, the order is placed. The bot doesn't care if there's a scary headline on the news. It doesn't feel fear. It just follows the rules you gave it, period. The beauty of automation is its relentless discipline. A human might see a trade going against them and break their own rules, holding on and hoping for a comeback. A machine? Never. It will cut a loss at the predetermined stop-loss point without a shred of regret. It operates 24/7, never needing a coffee break or a vacation. While you're sleeping, your automated system can be scanning global markets, looking for opportunities, and executing trades. It's like having an army of emotionless, hyper-efficient traders working just for you around the clock. That's a powerful, powerful advantage. And let's talk about speed. We're not talking about clicking a mouse quickly. We are talking about high-frequency trading, or HFT. These are the Formula One cars of the trading world. They use supercomputers and co-location, placing their servers right next to the exchange's servers to execute trades in microseconds. That's millionths of a second. They capitalize on tiny price differences that are invisible to the human eye. This is a game of speed where humans can't even begin to compete. The machines are simply in a different league. It's pure, raw, technological power. Alright, let's put these two titans head to head. In the battle for speed, it's a knockout. The machine wins, no contest. An automated system can place thousands of orders in the time it takes a human trader to even process a single piece of news. For strategies that rely on speed, like arbitrage or high-frequency trading, the human is left in the dust. The bot is simply faster, more efficient, and can operate at a scale that is humanly impossible. It's like a person on a bicycle racing against a fighter jet. There's just no comparison. Winner automation. But what about learning and adapting? This is where it gets interesting. Machines learn from data. You can backtest a strategy on decades of historical prices to see how it would have performed. This is a huge advantage. They can optimize and refine their approach based on statistical analysis. However, a machine is only as smart as its programming. If the market suddenly changes in a way that's not in the historical data, a black swan event like a pandemic or a financial crisis, the algorithm can go haywire. It's stuck following rules that no longer apply. The human trader, on the other hand, learns from experience and context. They can adapt on the fly. They can read the subtle, qualitative signs in the market. They understand that the world has changed and that old models might not work. A human can see a developing crisis and decide to pull all their money out, even if their technical indicators haven't given a sell signal yet. This flexibility, this ability to think outside the box and connect disparate events, is the human superpower. In a stable market, the bot may have an edge, but in a chaotic one, a savvy human can be king. Then there's the cost and risk. Setting up a sophisticated automated trading system can be expensive. You need powerful hardware, reliable data feeds, and sometimes a team of programmers. The risk is that a small bug in your code or a faulty data connection could lead to catastrophic losses in seconds. For the manual trader, the main cost is time and research tools. The risk is primarily emotional, making impulsive decisions based on fear or greed. So you have to choose your poison, the risk of a technical glitch or the risk of a human error. Neither one is foolproof. So, who wins the ultimate showdown? Man or machine? Here's the crazy thing, the twist you didn't see coming, you don't have to choose. The real winners, the smartest people in the room, are not picking a side. They are combining the best of both worlds. They are creating hybrid systems. This is the future, and it is happening right now. The human-AI combination is the new, undisputed champion of the trading world. It's like putting a supercharged engine in the hands of the world's best driver. It's the ultimate power couple. Think about it. You use the machine for what it does best, crunching massive amounts of data, identifying patterns, and executing trades with lightning speed and perfect discipline. The AI can scan thousands of stocks and flag the top 10 that meet your specific criteria, something that would take a human weeks to do. It acts as your tireless, brilliant research assistant. It brings the opportunities to you on a silver platter, filtering out all the noise and focusing only on what matters. The machine does the heavy lifting, the grunt work, but the final decision? That still rests with the human. The human trader takes the machine's recommendation and applies their own experience, intuition, and big-picture analysis. Does this opportunity make sense in the current geopolitical climate? Is there something about this company's management that the algorithm doesn't know? The human provides the context, the qualitative overlay, the common sense that machines still lack. They are the final checkpoint, the safeguard against the algorithm running wild. It's the perfect synergy of machine logic and human wisdom. So the big question isn't whether you should be a manual trader or an automated trader. The question you should be asking yourself is, how can I use technology to become a better, smarter investor? You don't have to be a coding genius to get started. There are tons of tools out there that can help you screen for stocks, test ideas, and set alerts. The future of trading isn't about replacing humans. It's about empowering them. It's about creating a partnership between your brain and the machine's processing power. Now get out there, do your homework, and find the style that will make you money. Booyah!